Hey everybody, and welcome back to the Crypto Report. I am Crypto Kip, and today is March 23rd, and we have got some awesome stories for you in a day where the markets are holding firm. Bitcoin at that $42,000 price level, Ethereum right at 3K, a beautiful price level indeed. Make sure you guys are smashing up the like button and subscribing to the channel and leaving a chat in the comments down below. If you want us to do a video, please let us know what kind of content you guys want to see. Also, make sure you're taking advantage of the free money in the links down below. $25 referral bonus to crypto.com. And also, if you want to do some leverage trading, head on over to Femex with the referral link down below, and you guys can get some free money too there as well. With that being said, let's dive into the charts. Okay, so cryptocurrency market cap for the day sitting at $1.926 trillion. Okay, we are moving up, folks. We are moving up. 24-hour volume a little bit down today at 88 billion, which is just a small amount of money. Oh yeah, just a tiny bit actually. Bitcoin dominance at 41.7% and Ethereum at 18.6%. ETH gas fees went up a little bit today, about 20 gwei, sitting at 53 gwei today. Some of the trending tokens, Ethereum, one of the trending tokens. PancakeSwap, one of the swap programs on the Binance Smart Chain, is trending, and AltSwitch, not familiar with that one. So let's look at just a couple of these top 10, top 20 coins here, and let's look at the 24 hours and the 7-day gainers. So 24 hours, again, everything's kind of stuck here today. We're not really doing much movement. Cardano had a 10% pump. Wow. I did see a little article saying that there was a new announcement with Cardano, and they are moving closer and closer to being a better and better competitor with Ethereum. We can dive into that one another time, but Ethereum, oh wow, Cardano with a 30% pump on the last 7 days. Absolutely unbelievable. Breaking that dollar. It's been trying to break for a while. Terra Luna up 2.61%, 7.76% for the week. Solana did well over the last 7 days. Not so good on the day, but that is one to keep an eye on as well. Avalanche sitting tight. Polkadot hanging out. It looks like, so here's something I want to point out. Ethereum, Cardano, Terra Luna, Solana, these are all smart contract plays. And so what we see is over the last 7 days, 10%, 30%, 7.7%, 12%. Avalanche, I believe, is one of those as well. 21%. Polkadot, definitely one of the 12%. So the smart contract plays are really having a big bounce this week. Bitcoin up 4%, which is classic. Bitcoin would move a little less than the others, but these smart contract plays seem to be moving this week. As you can see, some of these other ones, they moved. Polygon is a layer 2 solution for Ethereum. You know, that moved quite a bit, so that's in a way a smart contract play. But you'll see that those kind of moved the most this week. Even Cronos, they have their own Cronos. They've got crypto.org chain. So they've got a smart chain as well. But it looks like some of those are the biggest movers. Coincidentally, also up towards the top 20. So that's a good thing to notice, that a lot of these big movers and these top projects are going to be these smart contract plays. Ethereum is the biggest one of them all. Let's take a peek at the Bitcoin chart to get an idea where we're going for the week, and then we'll talk a little bit more about Ethereum. So Bitcoin yesterday was touching 43, and it bounced back down and had a little bounce here. We're kind of still in that trading channel we were talking about. We slightly broke above it right here, but we kind of came right back down, and so we're going to have to wait and see what's going to happen in the days, weeks, months ahead. We are hoping to see, and I'm going to even break it down for you guys into the 15-minute chart. Let's just see what's going on. So it looks like we're spiking up. If we can get a close here at the end of the week on the weekly candle, and let's peek at the weekly candles actually, matter of fact. If we can get a close on the weekly candle, and we can get that to close green, then we could be poising ourselves, potentially, We want to close. See this blue line? We drew this blue line the other day. This has been a bouncing level. Everything wants to bounce off this line. When you look at the more hourly time frame, that's a big resistance. If we can get a candle that closes above this, I would love to see a pump up to 48, 55,000. Be on the lookout for that, guys. If you're a leverage trader, you're going to be wanting to look for that breakout moment, and you might want to take your long there. If you're a leverage trader, though, always be careful. And take advantage of the free money in the FEMEX link down below. So I do want to take a peek at these charts over the next weeks and make sure we're keeping an eye on Bitcoin for you guys. I'm looking for, I think today, I'm bullish today. I'm ready. My only fear for today specifically is Jerome Powell might speak again, the federal chair. So if that happens, he might spook the market. Who knows? Maybe he might pump the market. Maybe it's the opposite of a buy the rumor, sell the news event, which seems to be happening a lot lately, which is very bizarre. But keep an eye on Bitcoin, guys. Let's talk a little bit more about Ethereum. It's trending today. Why is it trending today? Well, we are getting closer to Ethereum 2.0. And this article came out by Decrypt yesterday, and it says nearly 6 billion in Ethereum burned as Ethereum 2.0 edges closer. The second largest cryptocurrency, Ethereum, has officially destroyed more than 2 million ETH via a burn mechanism introduced last year. For those of you that don't know what a burn is when you take cryptocurrency tokens and you deposit them into what you call a burn wallet. It's a wallet where you put tokens to go to die, basically. And the way that works is this is a wallet that there is no private key to, that is destroyed upon the creation, and it's just basically an empty place where these cryptocurrencies will go. Nobody will ever be able to access them again. It's essentially the same thing as those folks that lost all their Bitcoin in these landfills, and they got millions, if not billions of dollars sitting in landfill. You're not going to find your chip. It's even more technical than that, because it's literally in a secure wallet that the password to that wallet has intentionally been destroyed forever. And so these coins will no longer be in existence. And what does that do for the price of ETH for any token that has a burn? Well, it actually makes it more valuable, because then there's less supply in existence, and then that makes the demand that much more valuable. It makes the coin go up because there's less in existence, and if the demand stays the same but less is in existence, then that actually makes the price go up. That's how it works. So let's look a little bit more in depth with this. According to Watch the Burn, a dashboard monitoring the burn mechanism, the network has destroyed 2,996,000 Ethereum since its inception. In dollar terms, that's more than 5.82 billion removed from circulation forever. Yes, implemented in the London hard fork, which was recent, EIP 1559, the technical name for the burn mechanism, was just one of several updates made to the network. So this was a really big one that really helped the burning. I'm going to get into, so what is Ethereum 2.0 and what is Ethereum's plan for the future? Well, we've been talking about Ethereum 2.0, and by we, I mean the crypto community, for years and years. And people thought it was supposed to come out last year. That didn't happen. And now they're even looking at, I saw in this article, they were talking about looking at setting up Ethereum 2.0 in Q3 or Q4 of this year. So that's something you want to be on the lookout for, Q3, Q4. If we do hit Ethereum 2.0 in Q3 or Q4, then we would be looking at potentially a really large price increase building up to that date or on or around the date that this gets launched. So when we go into this and we move towards Ethereum 2.0, we are going to be going into this new structure. So traditionally in the past, fees would go, the way it works is when the computers are talking to each other and the network is existing based on all these computers that are set up across the globe. These are the Ethereum miners, right? And so each time these miners solve the algorithm and basically do the math to balance out the ledger on the Ethereum blockchain to make sure that it's functioning properly, there are going to be fees, and these fees are Ethereum. So this Ethereum is given to all the miners, all the people that are plugging in their computers and helping solve the blockchain, the Ethereum blockchain, get a fee. Well, today, that's how it works. In the future, with the EIP 1559, there's going to be a new way they do this, where they're going to give a base fee to a burn wallet, and they're going to give a tip to the miners. And they're going to move away from where the miners are getting all the fees, and they're going to move towards where the base fees are being burned. And so we're going to increase the burning of Ethereum. And this is kind of right around the time we're going to move from proof of work, which is what Bitcoin's run on, which is all the mining, to proof of stake, which is different, which is what Ethereum's moving towards. And it's more eco-friendly because of all the mining that Bitcoin does and the controversy around it. A lot of people look at that and go, well, that's not environmentally friendly. Well, when Ethereum comes out with Ethereum 2.0 and they move from proof of work to proof of stake, that's going to help solve some of that anti-environmental FUD that's being put out into the news about Ethereum and cryptocurrency and Bitcoin. So this is going to be a good one environmentally for Ethereum and for the world. And I think it's going to be a good one for the future, because what this is actually going to do is this is going to speed up recently rebranded consensus layer to, so this is Ethereum 2.0, would improve the network's transaction speeds, lower the costs, and will lay rest to Ethereum's carbon or energy footprint problem, according to Lubin. Joe Lubin, who is the co-founder of Ethereum, who is actually doing a lot in the mainstream today as well. We talked about an article just the other day where you had Goldman Sachs actually do some buying, and there's a lot of partnerships going on with Joe Lubin and the traditional market. So keep an eye out on Ethereum, guys. Ethereum 2.0 is coming along. In the meantime, here's another big story for us. The NFL will now let teams seek limited blockchain sponsorships, but cryptocurrency promotion remains banned. So they can't promote cryptocurrencies, but they can do sponsorships. We are teeter-tottering. Before, they kind of shut down anything blockchain, anything cryptocurrencies within the NFL, but recently they kind of did a little flip-flop on that, as we're clearly moving into the future. Couple key points from this article. The NFL granted teams limited permission to seek blockchain sponsorships, although bans on cryptocurrency promotions and fan tokens remain in place for now. Keyword for now. So they are getting closer and closer to getting more and more into the blockchain space. We're going to start seeing, I'm sure, cryptocurrencies on jerseys here in the next 1 to 2 years. The permissions, which are subject to the NFL's approval, exclude stadium signage. Restrictions remain in place for cryptocurrency and fan tokens. So that is interesting. They are going to not allow any signage, which means I don't think they're going to have like a Crypto.com arena kind of rebranding of any of the stadiums per se, but we might move that towards the future. The league's decision also comes after a recent federal lobbying to push related to blockchain. A federal lobbying push. Guys, what does that tell you? That screams that big boys with big money and big key decision makers in government and in the institutional side of things are pushing blockchain, which is very exciting, including the NFL. So, they last summer they went out and they kind of poo-pooed any crypto sponsorships. Well, now they are, last summer they did that, and now we are kind of moving in that direction where they're going to start allowing that. And that's the NFL, but also soccer. For all you soccer fans out there, Crypto.com, one of the bigger exchanges out there, I think their coin, Cronos coin, is at ranked 17 right now in crypto market cap with a market cap of $10 billion. Nabs FIFA World Cup sponsorship for undisclosed sums. So they're not going to talk about how much they paid. I can't wait till that number comes out. They spent $700 million on the naming rights for the Crypto.com arena. They took over the Lakers' home stadium. They took over the Lakers' home stadium and they rebranded it to Crypto.com Arena, which is a huge move. FTX also bought an arena in Florida, I believe. So you're seeing these crypto companies, specifically these huge crypto exchanges, buy these huge sponsorship programs, buy arenas. And this is another one. The FIFA World Cup is massive. Soccer has one of the largest audiences in the world next to the Super Bowl, which, by the way, both FTX, Crypto.com, and Coinbase had an ad in the Super Bowl, which I'm sure you saw. The exchange is adding to the world's most storied soccer tournament to its growing list of sports sponsorship deals. They have partnerships with the UFC, they have partnerships with all sorts of folks. I mean, well, I'm sure they are going to get football soon, but from basketball, you're going to see their name on some courts. You're going to see their name on some stadiums. You're going to see advertising in CNBC even has Crypto.com as a sponsor for their channel at times. Now it's soccer and it's ongoing. F1 speed racing they're doing. So this is really, really huge. Here's a quote by Steven Kalfowitz, the Crypto.com CMO. No sports brings the world together like football, and no sporting event brings the world together like the way the FIFA World Cup does. Only a few brands have the privilege to participate as official sponsors, and we jumped at the opportunity to be the first brand to represent crypto in this industry in this historic month-long event, which is absolutely awesome. Very exciting. They highlight the Staples Center deal in this as well. The exchange currently has over 4,000 employees across America, Europe, and Asia. I myself, just out of curiosity, even looked at the jobs there, looking for a lot of really smart technical people that can code, which is good to see because there's a lot of security concerns with these exchanges. They got to be really, really on their game, and they got to be making sure that they're complying with regulation and the governments. So be on the lookout, guys. I talked about FTX yesterday. I'm talking more and more about some of these large exchanges. I think that exchange tokens are probably some of the best investments in crypto right now because they're clearly integrating with society, with sports teams, with companies, with a lot of different organizations. And these are C-suite people that can connect with other C-suite people. I think that these companies are going to be around for a while. And the best part about it is whether you're invested in these coins for these exchanges, or coins listed on these exchanges, these guys are on your side. Crypto.com, FTX, they are pushing crypto into the mainstream, and they will bring it to the forefront of society. Right now, we're looking at, I think 25% of people, adults, own cryptocurrency right now. Maybe even closer to 40% own cryptocurrency right now. One day, we're going to have it at a point where everybody has a piece of cryptocurrency. And even those 40% folk, they own only a little bit, and the majority are kind of just holding little bags here and there. Make sure you're DCAing, buying the dip, guys. Keep an eye on the latest, and stay tuned to the Crypto Report. I am Crypto Kip, and this is a great time to hodl and buy. Later, y'all.